Good day. Afternoon tea with Travis today. We actually waited a bit for the update just because of some things that were going on in the market. I wanted to see how things were going to how the cards were going to lie or fall. And actually we're very positive right now. Mortgage-backed securities are up 44 basis points, which what that translates to is about a 0.5% better fee today than it was yesterday, if the investors will give us the full credit on that jump in pricing. Due again because of the supply and demand issue I've talked about the last few videos. But the good news is that mortgage-backed securities are up 44. They've gained back the ground. They've lost the last few days because of the fear of inflation, the fear of our Treasury printing so much money and so many bonds like they did today. The auction today was for $40 billion of two-year notes. And so if there wasn't a big interest in those notes or that two-year auction, then it would again put pressure on bonds to pull values down on them because nobody really saw the value in them. So on a global level, when China buys a lot of our bonds and different foreign economies purchase our bonds, as well as our own national interest in our bonds that we buy, the concern was, well, gosh, they're not going to have a lot of interest in $40 billion worth of bonds, and the showing was great. There was a strong support and purchasing of these two-year notes. And so again, it points back to people are not confident in the stock market right now, and they're grasping on to what could be confident. And even though there's some risk right now with the Treasury printing so much money in bonds, still it was the best thing on the market right now. So it fared really well. In turn, translating to long-range mortgage-backed securities, our 4% note is being traded again up, like I said, almost nearly 0.5%. We'll see how things end today, but right now it's really positive news. Again, investors we're not seeing a bunch of increases on rate sheets, meaning better rates on rate sheets, because again, the supply and demand issue, the lenders haven't even cleared out the loans that they locked, the last 3 weeks when rates were down in 4.75 range. And so they're kind of a little bit leery to release that back out to us, because then we'll just start flooding with locks again. So there's so many of us right now, so many of my clients waiting to lock in at a rate in the 4% range, as well as my colleagues. And so as soon as those numbers come down, the floods come in, and then they're overwhelmed again, and we create this cycle of supply and demand. But that is great news, though. There's not that pressure I thought there was yesterday when I had this update. So rates should continue to improve, not only for the supply and demand issue, but for the fact that the people are still finding mortgage-backed securities very valuable right now. Even the two-year Treasury notes are being found valuable, obviously after today. But gosh, there's some crazy cuts going on right now. As I mentioned yesterday's report, today more and more keep coming out. Pfizer now announced 20,000 on top of the 20,000 from Caterpillar yesterday, and then we have Home Depot, Nextel with Sprint, Microsoft. I mean, the list goes on of all these companies that are reporting terrible losses in fourth quarter and having to slash their work staff or their work crew. So again, scary for the economy, with unemployment numbers going to be flooding now into the state system, because our state levels have to pay unemployment on a local level, and if they run out of money, then the feds have to step in. So again, this fear of inflation is pushing on us. But right now, it turned out well today on these Treasury notes. Also, with the consumer confidence index came out today. It's a measure of how confident we are in the economy, and they take the survey every month. And a lot of analysts thought it would perform better because of President Obama being sworn in his inauguration, as well as President Bush leaving. And we thought there would be more consumer confidence, but it's actually the lowest number ever since 1967 when they started tracking this number. So that wasn't real good for stocks, but good for bonds. Anytime there's bad economic news, good for bonds, because it is that flight to safety, like I've mentioned. And finally, the last thing that yesterday we talked about, existing home sales doing well and surprising analysts having bigger numbers in December. But like I cautioned, it's kind of bittersweet, because the reason for that was because of all the short sales and foreclosures out there, which today's numbers really supported. They said that the Schiller Index, which is basically the 20 largest cities, they take the home values from a year ago, November, to a year later, which was November of 2008, and they see what the home price values, how they've declined or increased. Well, on national average, 18% is the average on these 20 major cities. And so in Phoenix, we saw a 33% decline in 1 year in property values, 32% in Vegas, 31% in San Francisco. And the great news is, though, again, real estate is not a national thing. It's hot and cold, just like you heat up lasagna in the microwave. You're going to have hot spots in the middle, and you're going to have cold spots, or hot spots on the outside and cold in the middle, and that's how it is. And Portland, fortunately, has only seen a 4% loss year over year in home values. So 4% versus 33 in Phoenix, that's pretty big difference. So don't get too focused on the national media, get focused on what's in your market. So that's the update for today. A lot of information there. But the good news is mortgage-backed securities are doing well, and that should translate to us getting lower rates again. And gosh, it would be great to get them back down in the mid-4 range, which I think we're leaning to with all the indicating factors and technical factors coming up. So hope you enjoyed the update. Please call us anytime with questions. We look forward to serving you, and be blessed.